Hello, and welcome back to Camel Finance. I'm your boy Camel, and a little bit of news following on from yesterday. If you haven't seen the CPI inflation data is a lie, go back and watch that. Link on the Twitter, and I'll put a card in the top right of the screen now. If you have seen that, following on from that yesterday, we have had the UK inflation data come out, and they reckon 7%. So the US data yesterday was 8.5%. If you believe their make-believe metrics, and if you believe our make-believe metrics here in the UK, then we are at 7%. It's an interesting chart here. This shows they're 7%. You can see how wild and out of control this thing looks. But I can assure you it's much higher than this in the real world. With all that in mind, let's take a look at a few charts. Starting off with the S&P here, we are still mid-dip by the looks of things. I did say I don't know where this is going to go. You go back and watch the previous chart videos, you'll see that. So does it end up here? We should be very close to a bottom in my opinion, in both price range and time. So I would think that this will be a buyable dip fairly shortly. The caveat to that is I do want to see some sort of swing low or reversal bottom here. I don't want to just jump in and try to catch a falling knife. But I do think this is longable. The Nasdaq, similar story. You probably get quite a nice entry, waiting for a breakout of this. And as for the Dow, it will be much of the same thing. I think if you wait till we cross this, or draw this however you want really. So wait for a breakout of this, and then you can jump in long there if you want to. Let's have a look at oil. Oil has again been sort of behaving exactly how you'd expect it to. We did get a little breakdown. We did bounce off of this level that I thought we might. We didn't make it as far as this one yet. Things to be mindful of. We have broken down and are retesting this upward sloping trend line. So this is not the time, in my opinion, to be jumping into a long. We do need to see if we can first recover this upward sloping trend line. Otherwise, it seems like the path of least resistance is down from here. However, given the support here and here, I wouldn't be surprised to just see like a sideways market, a little bit of chopping here for a while before we can actually find a low and move. So I think in the meantime, shorts from here, no problem, but I wouldn't be jumping into any longs personally. Inflation, of course, great for gold, and we are seeing that this thing is playing out exactly how we thought it might. If you haven't seen the previous videos, go back and watch those. Patience did pay off here. You would have got chopped up a little bit for not paying patient, but once obviously you take out this prior high, then no problem to trade this. And we also said if this gold breakout was for real, then you'd expect to see silver moving up as well. And that's exactly what silver's doing. We are into resistance right now. So again, if you miss this entry, then now is possibly not the time. I wouldn't be surprised to see it reverse off of this. Wouldn't be surprised to see it chop for a while. But a clean daily close out above this area, and even a clean breakout retest and then resumption would also be a decent thesis with an invalidation point for your trade. Okay, so take a look at the miners here. We are still sort of squeezing between this horizontal resistance and this upward slope. Again, not really the time to be jumping in my opinion. We want to wait for a clean daily close above this, but if gold can continue and silver can get above this this area and continue an uptrend as well, then you would absolutely expect the miners to start outperforming. So I think a little bit more patience is okay. And we've got very good, this is a really nice trade for me. And if it were to fail to break above this, then it will violate this trend line here. And therefore, an easy short can be had with a stop just around here. My stops for my longs, if we get a break, will probably be, I don't know, down here somewhere. Just show you what that looks like. Something like this, I guess. Something in this neighborhood, I think would be a fairly decent trade. Junior miners are much the same. We'll be looking for longs daily close above this, and failing that, it will break this trend line and go down. So a nice short there with a stop up here, or if we can close above this, then a nice long with a stop somewhere down here. And silver miners are the exact same story as well. So again, we got really clear invalidation here. we're squeezing. Above this we're long, and below this bottom one we are short. Finally, Bitcoin. It's seen better days, hasn't it? But at the end of the day, it is what it is. I like this line, takes away some of the noise. We haven't really done anything, have we? If we follow where we are today, all the way back, we're at the same price that we were in January 2021. So no significant damage, no significant progress. I am still standing by my theory that we're gonna make it up into this neighborhood, and then we'll make some real decisions. I will be forced to accept I'm wrong about Bitcoin if we lose this level down here. Yeah, if we start to lose 32, and certainly if we lose these lows at 29.5, then we will be performing a lot of risk management as appropriate. The fact we've stopped in this area suggests to me that, yeah, maybe we can trade sideways and then recover, but that remains to be seen. So for now, kind of boring, to be honest, and still looking for this purple zone up here as a potential area for profit taking. You would think with a longer term view that since inflation is going to be persistent for a while by the looks of things, since inflation is as severe as it is, and this is severe even if you believe their numbers. If you're like me and you don't believe their numbers and you think they're a lot worse than they're letting on, then the case for this decade to hold gold, silver, miners, and some cryptos, especially the ones like Bitcoin that can't be inflated and are scarce and hard forms of currency, then that case I think is becoming stronger every single day. Lastly, I just wanted to show you this. This is gold relative to the Dow Jones Industrial Average, and you can see in the financial crisis, gold significantly outperformed. So when this chart is going up, gold is appreciating relative to the Dow, and the converse is true too. So when this is going down, it's better to hold stocks than it is gold. You can see in the financial crisis that gold massively outperformed gold. You can see during the financial crisis, 2007, 2008, that gold massively outperformed equities, and you would have been far better off holding gold than equities. And then you can see that after gold topped and the stock market went on its historic run, that you were way better off holding equities rather than gold. But I do believe that we're transitioning into a period now where gold is going to start to massively outperform equities. That's not to say I don't think the stock market isn't going to do well over the next few months. I don't think the stocks have topped yet, but this with a longer term view, we're going to see a repeat of this. Not peak for peak, trough for trough, of course, but I do think we're going to see gold massively outperform equities over this decade, and I would expect to challenge this ratio up here and maybe even breach it. So that's just a quick one from me. I hope you enjoyed it. Let me know if you did, let me know if you didn't, and until tomorrow, I'm your boy Camel. Take care.